All right, let's get started. Do you guys see a slide that says the mother of all bubbles? The mother of all financial bubbles is about to pop again. And if you're not ready for it this time, it's going to hurt. Okay. Now I'm going to make you I think it's the best disclaimer in the financial business. I don't know if you guys have ever seen it before. If you haven't, this is what it looks like. It is my no bullshit guarantee. I cannot and I will not make you any guarantee whatsoever. There is no such thing as a guarantee in any financial markets that I've ever been a part of. I don't get a guarantee, so I can't give you one. My results are not typical. I've been trading for 30 plus years. I would have to be either slightly crazy or sadistical, or if I didn't pick up a few tips or tricks along the way. Also, I do not verify testimonials that people send me via email, so you should consider their performance and results as not typical. Most people lose money trading and investing. If you understand the warning disclaimer that I just made you aware of, type the number 22 into the chat box. That means my mic's working and you actually understand that the risk that you're putting yourself into, okay? And I know some people think this is a joke as a warning disclaimer. It's not. That's really how the financial markets work. Like, there's no way somebody can guarantee you anything in a financial market, right? All right. Now, I also used to be registered as a Series 3 and a Series 30 when I used to own a futures brokerage business. I no longer do that, but I like to pretend I'm still registered. So you'll hear me say potentially a lot instead of guarantee. And basically, you just need to read the hypothetical and simulated performance. Really what it's saying here is, if you should never trade more money than you can afford to lose. And number two, past performance is never indicative of future returns, which is just a fancy ass way of saying just because I made money yesterday or today does not mean I'm going to make it tomorrow or next week. Okay. So if you understand that disclaimer, type the number 11 in the chat box. My name is Hubert Centers. I'm known in the trading and investing world and the angel investing world as a guy that's got a no BS approach to investing. It's not like for design. I'm just not that smart. So I'm probably average or slightly below average. Anytime I'm in a room with a mastermind or any of the other business stuff that I deal with, I'm never the top dude. I'm never the bottom dude. Usually not. But I'm kind of either in the middle or slightly below. But I'm known as having a no BS approach to investing. I think it's just because I'm dyslexic. I learn weird. And I have to learn stuff over and over and over again. But then when I learn it, I've kind of got it locked into my DNA. So I'm a little slow. But once I learn something, I can pick it up after that. So when I was growing up in the hills of Eastern Kentucky, I did not have a ton of really good role models. Although I did have two really good ones, which were both my mother and my father. And they worked at a factory called American Standard. You may have seen their plumbing fixtures, their sinks, their faucets, their commodes, their shower heads, all that good stuff. You've seen American Standard stuff, right? The other opportunities that I had available to me in the hills of Eastern Kentucky around the coal mines was obviously could have went and been a coal miner. I did not really think that being in a dark, damp, wet place that you could potentially die of a cave-in, either drowning or electrocution, was a great ideal. So I was like, nah, I'm not doing that. Other opportunities that I had available to me would have been the good old fashioned. They got a new weed for a new name for it. What's it called? It's called the cannabis. It used to be called weed, and then it went marijuana. And now the sexy name is cannabis. I could have went into the growth, the sales, or the distribution. Decided not a great idea. Could have also went into the good old fashioned meth business. Could have been a meth cook. Could have went into the sales or distribution of that, or the good old-fashioned moonshine business. All three of these, if you get them, there's three different levels: the making, the distribution, and the sales. If you get good at any of them, you're probably going to win a first-class ticket to the federal penitentiary. And I was like, not doing that. So when I was about 17, I decided I'm getting the heck out of there, and I'm going to go figure out how to make cash flow and wealth. What I found by interviewing a bunch of millionaires and a couple billionaires, and I had to pay these cats to talk to them, or I had to volunteer, or I had to give money to their charity, or I had to just say, hey, I want to talk to you. How much does it cost? I found that there were three main ways that most of these folks made money. And in no order, but this was the common thing. They either owned their own business or they invested in someone else's business. So they were an owner. They were an investor in a business. they would either trade and or be investing in the markets, or they would do real estate. And most of them, believe it or not, did all three, but they had a focus on one and they dabble in the other two. And most of them that made the most money focused on one particular category. Okay, so the goals and focus for this webinar is what you're about to discover will be worth at least $3,000 to you. All I ask is if you treat as if you paid $3,000 to be here. Here's why I say that. You're probably just like me. If I don't pay, I'm not going to pay attention. Like if somebody gives me a freebie, I'm like, oh, that's a neat little chalk sheet, and I just throw it over there or throw it right into the trash. So pay attention. Don't be on social media and stuff, because what I'm about to share with you, when it rolls over, you can actually use it to your benefit, and you can either single dip, double dip, or triple dip, which can potentially really, really increase your returns. Okay. So first, I would like to know a little bit about you. So I'm going to throw a poll up here. I'm going to launch it real quick. You can actually poll this on GoToWebinar. So just vote on the poll. Like, what do you trade the most? Is it stocks? Is it options? Is it futures? Is it Forex? Is it cryptos? Like, I trade them all, but there's always one that you're going to gravitate one more towards the other, right? So as you're doing this, I'm going to take a little sip of my caramel macchiato. Are you supposed to say caramel or caramel? I can never figure that stuff out. But anyway, I'm going to count you down. 5, 4, 3, 2, 1. I'm going to close the poll out, and I'm going to share it with everybody. Okay. Now you check me here. Just verify that the stats are correct. 30% of you on this live webinar trade stocks. 51% of you trade options. 7% of you trade futures. 9% Forex, and only 2% of you trade cryptos. All right. Now I'm going to hide that poll. Okay. I'm going to go to the next question. Now, I need to know what time frame. I've got a poll here. All right. So what do you consider yourself more of? Do you consider yourself more of a day trader, a swing trader, or a longer term investor? And I'm just trying to get a feel for the crowd, because every crowd's slightly different, and I'll try to tailor my presentation to that crowd. I'm going to take another sip of this coffee here, get wired up. And then I'll count you down here. 5, 4, 3, 2, 1. And then I'm going to close it out. And then I'm going to share it with you. So you guys should probably see the answers. Do you see 25% day trade, 57% swing trade, and 19% invest? Is everybody getting the same results that I'm getting on the back end here? I'm just sharing the results with you just because I think it's really interesting for everybody to see like what your peers are and stuff like that in these things. Okay. All right. I'm going to hide that. And then I'm going to get to work. All right, so congratulations. You're about to witness one of the biggest bubble pops of all time. And you're in the right place at the right time, and here's why. The markets are going to pull back a lot soon, in my opinion. Now, if you're not ready, you're going to lose a lot of your money in the markets if you make the wrong moves. You must do the right things at the right time. Doing the right thing at the wrong time, it just won't work. I've tried it before. Today, you'll discover a simple way to do just that. I'm going to show you how I've timed it in the past, as early as most recent as COVID. I'm going to show you how we single, doubled, and then triple dipped our way out of that nice little COVID sell-off. This tactic has helped me catch some really great moves in the past. Now, once again, past performance, not indicative of future returns. Just because I navigated COVID successfully does not mean I'll navigate this one successfully, but I'm going to use the same exact tools that I used back then. Now, let's go through Aesop's fable. Does everybody know Aesop's fable between the scorpion and the frog? There's a scorpion stranded on this deserted island, and then basically he's killed everything there. He's eaten everything. This frog swims up, and then the scorpion says, hey, man, give me a ride over to these other islands over here, because there is nothing else to eat here. I've killed and eaten everything. And the frog goes, whoa, 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 easy, man. We are mortal enemies. I'm not letting you jump on my back. You'll just kill me right here and eat me. He goes, well, as appetizing as that sounds, if I do that, I will still die on this deserted island. So I have no idea what type of influence skills this little evil scorpion has, but he talks this frog into it somehow. I don't know how he did it, but he did. And then so the frog falls for it. And then about halfway across this little channel from this island to this island, the frog feels a sting in his back as the scorpion stings him 3 times, like, and as they're both sinking to their watery graves, the frog looks up and goes, why would you do that? And the scorpion goes, it's in my nature. And they both die, right? So Wall Street, believe it or not, is the scorpion and you are the frog. If you fall for it again, it is your own fault, right? Like Wall Street's overall products, unless it's like an ETF or an index fund, unless it's those two, most products are designed on Wall Street to separate you from your money. Okay, so you got to learn from the past. Those that fail to learn from history are doomed to repeat it. All right, bubble market poll. Got another little poll for you. I'm going to hit with you here. Do you think that the market is too high and that stocks are overvalued? So answer that poll. You've got a couple answers. You can say no. You can say hell no. You could say yes. You could say hell yes, or you could be like, I'm not really sure here. I'm going to take another sip of this bougie coffee I'm drinking this morning. I think it's one of my other business partner favorites. Is on the webinar. Scott's favorite drink of choice. All right, I'm going to count you down. 5, 4, 3, 2, 1. I'm going to close that poll out. I'm going to share it with you. And here's the math I've got. Just double check me, make sure I'm accurate here. 5% say no, 4% say hell no, 56% say yes, and 25% say hell yes. So about 75% of us say that the market's overvalued. Now, if we were doing this survey across the swath of America, I would say that's a good sign for we're going higher, right? But since it's all of us in here, we're kind of weirdos. We're freaks. We're just trading and investing nerds, right? Like our porn is watching price charts go up and down, right? It's just kind of how we are. We're just a group of freaks and weirdos. And when I say groups of freaks and weirdos, I'm one of those freaks and weirdos right with you. So if we took that across the swath of America, I would say that that's not a good sign. But we all in here know a little bit more about the markets. We've got our pulse on the markets. We're always watching them from day to day. So that's a decent little market internal there for us. All right, I'm gonna hit you with one more poll, and then it'll be the last poll, okay? And this one is: do you think the market is going to dive again lower? And you got 5 different answers: no, hell no, yes, hell yes, and not sure. And just do it on the slide there. Just hit one of your buttons there, and it'll send your vote over to me. I'm gonna count you down again. 5, 4, 3, 2, 1. I'm gonna close you out. And I'm going to share your results with the rest of your peers. 7% say no, 0% say hell no, 63% say yes, 27% say hell yes, and 4% say not sure. All right, cool. Now I need to hide that poll and move on. That is the last poll I'm going to hit you with. That just gives me more information to deal with. All right, so we're going to build the case for what we think is going to happen. All right, here's how we're going to do it. We're going to use fear. We're going to use greed, which are the 2 major emotions that markets are driven by. We're going to use logic, and then we're just going to use some good old-fashioned experience. Now, heads up, PG-13, and then also this webinar is going to be weird. Now, when I say weird, I only dust this potential PowerPoint out when I think the market is too frothy and it's in bubble territory, and we've got the opportunity to potentially roll over in the future. That could be 2 weeks. That could be 2 months. There's no way that I'm possibly going to be able to predict the future, but I'll see it rolling over in real time, right? I can't tell you it's going to roll over 14 days from now, and heads up, neither can anybody else. But I can tell you when it starts to roll over, how to catch it, right? So this will be weird because I kept a lot of the same PowerPoints in here that I used for COVID the last time I made this presentation and gave people opportunity to take the class on demand. I'll show you exactly the information there. That's why it's going to be weird, okay? I'm just warning you. So a lot of times when we start looking at market crashes, a ton of us traders love comparing the crash from 28 and 29 because they'll look really close. And you can even throw them on top of a chart and you're like, oh my God, look how close that looks. That's amazing. The only problem is it's not 100% accurate, right? So in this case, you would think that the market would have went down here like this and then like that. That's not what it did. What it did is, where's my little ink at? Erase all ink. What it did on this case, it went like here, went higher, and then it did that situation, and then it went here. So it's not always going to be perfect, but it does give you some more data points to deal with so you can kind of, hedge your bets. Now, I wish I had a poll for this one. I don't. Where do you think we are in this little psychological paradigm here? Do you think we are enthusiasm, greed, delusional, new paradigm, denial, return to normal? We're definitely not in fear and capitulation, I wouldn't think. Is it a bull trap? Like, where do you think we are in this thing? Just put your answer in the chat box. I don't have a poll. I wish I had a poll for this one. I just want to see where you guys think we are right now. Somebody said enthusiasm. Here's some greed, some delusions. Got some of those. Greed, delusion. Okay. Denial. Okay. Greed, delusion, and denial. All right. Bull trap. All right. So nobody thinks we're in media attention, fear, or capitulation, right? So we're definitely either on this slope or this slope. So nobody in this entire webinar, and there's a lot of people in here, is saying fear or capitulation or media attention. And we only had just one that said enthusiasm. Everybody else is either greed, delusion, new paradigm, denial, no return to normal. And all right, so we all kind of know where we're at. This is really useful to let you know what will probably potentially happen in the future. So America's most dangerous bubbles, the U.S. equities markets, housing bubble 2.0. Now we're in housing market bubble 3.0. We have one of our team members is Katie. She runs our copy department, and she lives in Texas. Well, she did live in Texas, and they were showing her house. And on her house, they had like 45 people show up to their house, and they had 22 people that made offers on her house in Texas. And one person came in and made them $100,000 over what they're asking price and paid cash. I would say that's probably a housing bubble. Would you all agree? And then also, if you try, you've got the tech bubble, and then you got the bullish market over the last 11 years. You also have a huge bubble in car sales, right? So, and Jeanette's got a nice story she'll probably share with you about her buying an SUV. But if you buy an SUV right now, they want to charge you $10,000 off a sticker. And when you walk in the lot, they're like, "Hey, this thing says it's 70,000." Like, "Yeah, we're selling them for 80,000 or 82,000." Like, no, that's not serious. Yeah, they're in such high demand and low supply. We can get an extra 10 out of this. If you don't like it, you can leave the lot. So we're also in that. What other things are you guys seeing that the prices are starting to creep up on you? So it's not just housing, and it's not just automobiles. It's creeping up almost in every little aspect of your life. Food, gas, services, toilet paper, right? And now we've got the daggone Delta variant fast tracking across America. So that's probably going to bring another potential lockdown or extend that thing, right? Labor, like, have you guys seen this? Like, it's almost like nobody wants to work anymore. Like, me and my family were on vacation in Destin, and there were stores closed today, not enough employees to work today. And I'm like, what? And you're starting to see it everywhere. There's hiring signs everybody, but nobody wants to work. It is the craziest thing I've ever seen. So what we do is we look at what happened in COVID, and you can see, and this is where it's going to get weird, because I use these all for my COVID presentation. 2 days into COVID, we made the recommendation to our members, like, go to cash or short this thing, but definitely don't be long, okay? So you can see Monday down 1,000, Tuesday down 879, Wednesday down 123, Thursday down 1,100, Friday down 357. And then here were the headlines back in COVID. Kramer warns that buying any bounce after the Dow 1,000-point plunge is a sucker game. I don't think so. I made a ton of money doing it. This is a different warning against. This is different warning. Coronavirus pullback fears in stock market. Dr. Doom warns of multiple white swans posing dangers. J.P. Morgan, Citi, Goldman Sachs all believe that there hasn't been enough pain to call the bottom. Now, heads up, a little bit of confession time here. I cannot stand the clowns that go on CNBC and go, well, the price of gold is going to be 40,000 and the Dow is going to be 2,000. And they've done it for the past 20 years. 20. And then when it finally happens, they go back on CNBC and go, "See, told you." And you're like, hey, asshat, you've been doing that for 20 years. You were right 1 year out of 20. It is my belief that over the next 10 years, the stock market will be substantially higher from where it is right now. But there's always going to be nasty little pullbacks that, if you don't know how to navigate, can absolutely destroy your account. Okay, that's what I'm saying. I am not the sky is falling. I like trading long. I like trading short. I'll do both. Overall, the stock market should go higher over the next 10 years, right? So I am not a sky is falling type guy. And I hate the guys that do it on CNBC. I think you should be realistic. You shouldn't be always bullish. You shouldn't be always bearish. You should be realistic to what's going on and be able to take advantage of the situation. All right, so here's another one from Kramer. If no good news on coronavirus, expect more sell-off, says Jim Cramer. And then here's Jeremy Siegel. Sees coronavirus as a severe one-year shock to stocks, but then a bounce back. That's pretty accurate. What history of the big market losses can tell investors about coronavirus? This is important. All right, so write this stuff down. So you can see the four biggest day down percentage of losses. This was during COVID. This week, the credit crisis, terror attacks, Russian turmoil, and the credit crisis. That's not the most significant one. This is the one you want right here. I grabbed this right from CNBC. The 26 corrections have averaged a decline of 13.7. Everybody write down 13.7, put it in the chat box right now. 13.7 and over 4 months, and then it take another 4 months to recover. So we know we're probably going to get at least a 13% correction on the major indexes and some tech stocks that don't really make money. Now, it's probably not going to happen great to, like, Facebook, Google, places like that just print off cash. Apple will be fine, but it'll still pull back because when the indexes roll over, it's going to pull everything back, which is going to give you an opportunity to buy at a discount. Okay. Now, and you can also short the heck out of some of the crappier stuff out there. So it's either going to go to 13.7. So I just round it to 13 is what I say. And then God forbid if we enter into a bear market, the 12 bear markets have averaged a decline of more than 30% over 14 months and then have taken 24 months. So it's going to go from anywhere from 13% to 30% is the range that we're looking for when this sell-off begins. And heads up, I'm of the opinion that it's already starting to begin because the indexes are starting to falter, right? Now, we had a decent bounce on Friday, but so far, it's yet to be seen if that's actually going to hold, okay? So it's going to be anywhere from 13 to 30%. And I'm going to show you how you can potentially time that bad boy. All right. So here's what you want to do that because during COVID, I was able to, on just a straight up index in all my retirement accounts, in my retirement account, my wife's, all three of my kids, and my mother and father's, I was able to just buy the dip and just make a 30% trade for doing absolutely nothing than going just buying when there's blood in the streets. And people always think I'm crazy when I do that. Like, look, if you're holding this stuff for 10 years, what's it really matter? You want to buy on a red day, not an up day. Like you want to decrease your average price. So as it goes up over the next 10 years, you're going to make money. So if you do buy on a decline, you've got the potential to make a 10 to 30% return here if you time it right. And even if you don't time it perfectly, you're still going to make more money, in my opinion. All right. So let's talk about what about now. So once again, those that fail to learn from history are doomed to repeat it. So did everybody see the video that I sent you on the Michael Burry, the guy that was in the main character in The Big Short? Did you guys have a chance to watch that YouTube video? Let me see how many people actually watched that video. I love the video. I was like, man, I agree with most of this. I don't agree with all of it, but I was like, that's a really good video. I was like, it makes some really good points. And so I grabbed some of their slides and put them on here, and I was like, I like it. I'm going to use some of their slides because I thought the information was really, really good. So this is Michael Burry. Has everybody seen the movie The Big Short, at least, with Michael Burry? He's the guy that timed the housing collapse and the credit default swaps. Okay, if you haven't, go watch it. It's a great movie. You'll learn a lot about trading if you just learn it. The Big Short is a wonderful movie. It's done really, really good, and actually it'll teach you how Wall Street works. So here's what he says. People always ask me, what's going on in the markets? It's simple. Greatest speculative bubble of all time in all things by 2 orders of magnitude. Okay. And he goes on to say, people say I didn't warn last time. I did, but no one listened. So I warned this time, and still no one listens. But I will have proof this time. Pretty smart. And then he goes on and says, all hype and speculation is drawing in retail before the mother of all crashes. FOMO and parabolas do not resolve sideways. And he's true, they don't. When cryptos fall from the trillions, or the meme stocks fall from the tens of billions, then Main Street losses will approach the size of countries. History ain't changed. So real quick quiz. How did the GameStop and the AMC FOMO parabola work out? Did it go sideways, or did it go straight up and then basically straight down and then sideways? How did it work? Most of you know because you follow that stuff. Now, here's another tweet from him. Those saying me and Munger and Buffett and Singer are so out of touch are not considering that we've seen this before and not just once. So that's Michael Burry, Scion Capital, mother of all crashes, and the biggest bubble bet yet. So here's what I think you should also take a screenshot of Ray Dalio's presentation when he was asked, hey, do you think we're in a stock market bubble? Okay. So if you look at this, he rated the 1920, the .com, the 2007, and today's total market, and then today's emerging tech. So you can see over here, today's emerging tech, frothy, frothy, bubble, 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 somewhat frothy. Now on today's total market, somewhat frothy, no bubble, frothy, frothy, somewhat frothy, and no bubble. So it's mixed in today. So you got to be really picky on what you're trading. You've seen this over the past 3 months. It's not like back in January or February or March where you could just throw a dart at a board and go, you know what, I'll trade that. It'll probably go up. You can't do that anymore. Now you got to be picky. You got to be an actual stock picker. You can't just buy anything and it'll just go up. So you should screen grab this. It's really good. Put it in your notebook and look at it from time to time to make sure you know what's going on. All right. The wealthy are investing like it's a market bubble is here or at least near. All right. So the majority of investors with 1 million or more in their brokerage accounts believe that the stock market is in a bubble or close to being in one, according to the E-Trade Financial Survey. Now that was in January of 17. That's this year. If you look at January 17, we went up slightly from there, but we haven't went up a ton since then, right? So that's pretty accurate. And then now this is today's headlines. Bubble warning. The S&P 500 has only been this expensive for 4% of the last 140 years. I would consider that overbought. And then the bubble expert addresses epic stock euphoria. This feels like 1999. Global startup funding frenzy fuels fears of another bubble. I can tell you right now, in the startup game, there's more cash coming into the startup for angel investors than any time in history. It's crazy how much money is thrown at just crappy startups right now. So you got to be real picky in startups too. All right. Top investment strategist David says that the market is in a bubble that will come to an end. So now that we have the proof and the history that we're probably going to roll over in the future, do you believe that we are out of the woods yet? You think we're out of the woods yet? You think we're good here? We're going to go substantially higher? You think we're going to roll over? You guys already answered, so I already know your answer. We're probably going to roll over, and it'll probably be a pretty good little violent sell-off. In particular, if the Delta variant starts kicking everybody's rear end across the states, God only knows what our political leaders will do, right? Are we going to have to wear masks? I've already had 2 vaccinations. Do I have to go get the booster? Do I have to wear a mask too? It's like both sides of the aisle, Republicans and Democrats. We've got shitty leadership on both sides, and none of them can make a really good decision. So you know what it's probably going to do to the markets. All right, we're going to measure the strength of the move with 3 simple questions. You're going to ask yourself these simple questions. Is it getting stronger? Is it getting weaker? Or is it about the same? So what do you think right now? Is it getting stronger, weaker, or about the same? And then I'm going to show you how this works. I'm going to show you how I've done this successfully in bonds, gold, Apple both ways, COVID both ways, actually 3 ways on COVID, and then much, much more examples. And I'm going to do live Q&A at the end. All right. So what we're really talking about here is failure patterns and trend reversals. I titled it the mother of all bubbles because I only ripped this presentation out of the archives when I think we're a little bit in tall poppy syndrome here and about to roll over soon in the future, right? So I have done this successfully in the past in bonds from not bonds, but from gold from 1717 to 1200 for a 500 point move. That was back in 2013. So these are old slides. Don't worry about this. I'll do it all live in front of you here in just a second. Bonds, a 10-point move to the downside. It was timed that correctly. Apple back in the day when it was actually worth way more than it is today, as price-wise though, up to 612 down to 402. And then I've also done it on Apple from here to right there for a 63-point move. And then this is how we did it in COVID, and we told our exact membership, our subscribers, like, hey, this is not probably going to end well. And this is a weekly chart. So it's not a daily chart, it's a weekly chart. So take that into consideration. We shorted it here, okay? And we're like, hey, go to cash and or short some stuff, all right? Now, I traded it 3 different ways. In my retirement account, which is my long-term investment, which is the total stock market indexes in Vanguard, all I did is I bought here, I bought here, and I bought here. All right, so I decreased my average entry, and I was able to make a 30% return for doing absolutely nothing but just doing what I'm supposed to do. So that would be that's one dip, okay? The second dip is you can short this with index futures, and as it's going lower, you can then cover down here for 6 28,409 points, or a total of $32,045. All right. Now, if you would have bought either here or here, you would have made, and you had to buy both places, 13,890 points in the Dow with a total of 69,450 points. So there's three things you can do. Number one, you're going to buy the dip. Okay. You're going to buy the dip. That's what I did first. And then you can sell or short the thing to the downside. And then once it bottoms and it gives you like, hey, okay, I think the downside's done, then you can get long and hold, right? So you can do single dip, double dip, or triple dip. Now, best ways to time it, in my opinion, are on this chart right here. I'm not going to spend a ton of time talking about Ichimoku because I know you guys have seen me do that a lot in the past. I'm going to talk about the ADX, the Parabolic SAR, and then I'll talk about Ichimoku. And then we're also going to talk about experience and clues and market structures because it's really important. Now, the biggest reasons that traders get stuck trying to get to the next level is usually over trading. They end up trading chop and they end up doing the right thing at the wrong time. And it's super frustrating. And one of the most asked questions I get is, how do you identify trend versus chop? And it's a great question. And it's pretty easy with some basic tools. And the ADX is going to help you do that a lot. So everybody type in the chat box right now, ADX, ADX. This is a free available indicator that most of you will have access to. If you don't, you have a crappy charting platform. It is a free indicator on every charting platform that I know of. If your platform doesn't have it, you need to change platforms. All right, so first we're going to talk about what is the ADX. The ADX is an average directional movement index. The ADX is non-directional, so it will quantify a trend strength regardless of whether it is up or down. It is a method for evaluating the trend, and it can help traders choose the strongest trends, and it's useful for letting your profits run when the trend is strong. How I use the ADX is an ADX above 20 equals it's trending. Write this down. This will help you learn. ADX of 20 or above equals solid trend. All right. ADX below 20 equals chop. Now, can you trade when the ADX is below 20? Sure, you can. You can trade whenever you want. Nobody's going to tell you when not to trade. I would advise you against it because it's probably going to grind your account to dust, but you could do it. All right. Now, here's what mine looks like on TradeStation. So this is my 20. I call it my threshold line or T line. If the ADX is above 20, then I know my thing is happy and it's trending. If the ADX is below 20, I know my thing is pissed off and choppy and was probably going to try to smack me around and grind my account to dust. All right, is everybody following so far? Get another swig of coffee here. All right, this is what it looks like on the Dow. This is the daily. So when the ADX drops below 20, below that green line, it's going to say, hey, man, you can trade me, knock yourself out. But if you do, it's probably going to end bad for you. So it's going to say, just leave me alone in this entire blue area. And then you can trend trade me any other areas that are not blue. All right. Now, I just put the boxes on there. Basically, all you have to do is put a horizontal line and you'll say, okay, trending, non-trending. Now, notice you had both up and moves here and you had both up and down moves here. So it's not going to tell you the direction. It's only going to tell you if it's trending. Same exact thing. Here's Apple. Leave me alone. Leave me alone. The rest of the time I'm trending. You've got opportunities in those areas outside the blue area. So the ADX is non-directional. So it will quantify a trend strength regardless of whether it's going up or down. So here's a daily chart. This is a 3-minute chart of the S&P 500, the E-minis. And as you can see, first thing in the morning, it's trending higher. And then the ADX drops below 20 here on a day trade. And then, so you would stay out of it during this time, okay? And then the rest of the time, they'd be up there and then up there. Next day, it's opening up. It's trending both up and down, all except for right in, I'm trying to eyeball this, right in about there, you're going to leave that alone. So notice, it's not going to tell you which way it's going. It's just saying, hey, it's tradable. You probably got a shot here. Now, check out this chart of Apple. This is probably the one I should just show because I think it showcases this technique better than most. At point one is the ADX above or below 20. At point one, is my ADX reading above or below 20? And the 20 line is the green line. So is the yellow line above the green line? Yes or no? Yeah, it's above, right? Okay, so then at point two, in the AM session, the AM session is saying I'm trending. All right. And in this case, Apple went up in the AM session. And then at 0.3 is the ADX. Does the ADX drop below 20? Yes, it does. So it goes, you should leave me alone unless you just really, really enjoy pain. And some of you just enjoy pain. I know there's a few of you out there. And then at 0.4, now right here, I didn't do this one, but you could have done it right there, but it didn't do anything. So I just didn't mark it. All right. So right here at 0.4, it starts trending again. But in the PM session, in the afternoon, it went down. And you're going, Hubert, that doesn't look that useful. And I would agree with you. But here's an easy way for you to fix that, okay? The ADX only solves part of the problem. This is how you fix the rest of the issue, okay? You're going to add the bull spread versus the bear spread as a component to let you know who is in control of that market. So here's what that looks like, okay? So at 0.1 is the yellow line above the white line, yes or no? Let's just go through this check real quick. Make sure everybody understands what I'm talking about here. At 0.1 is the yellow line above the white line. Yes. All right. Is the are these little histograms here, are they green or red? That means I'm trending and I have bullish control until the bears show up here. So if green's on top, bulls are controlling. If red's on top, bears are controlling. Pretty simple, right? So what I did is I took a very complicated indicator that's hard as hell to read, and I just tweaked it to make it really, really useful, and I slapped a new name on it because I improved it. Okay, so remember this chart that we're looking at Apple, where we've got at 0.1, the ADX is above 20, and it's trending, and then at 0.4, it's then trending, but it's going down, so this is up and down. Now check out how simple this is to read. Okay, ADX above 20 here, right? Bullish control up until this point where the bears kind of showed their ugly little heads right here. So long, exit. Leave me alone because the ADX is below 20. Oh, look at here, trending again. Oh, bears are in control. Short and stay that way. Does this make sense logically to you? Okay, all right. All right. Now, what we're going to do next is we're going to use the Parabolic SAR. So everybody type in PAR-SAR, PAR-SAR. This is, once again, another freely available indicator. We're going to use it in a way that it's not really intended to use, but I'm going to walk you through how to use it, okay? So it stands for dynamic support and resistance, or stop and reversal signals. And this is going to give us like our buy or sell signals when we think we're getting a little toppy, okay, or a little bottomy. It was developed up by Dr. Wilder in the book called The New Concepts in Technical Trading Systems, and it stands for stop and reverse. The only thing I don't like about it is it's designed specifically to make sure that you're always in the market. And I don't know about you, I don't always like to be in the market, right? There's days where I'm like, this is crap. I need to avoid this, right? So there, cash or the sidelines is a position. I like to pick my points when I'm playing, okay? So here's the definition. You can also Google Parabolic SAR, Google yourself to death and see what happens. I couldn't tell you how it's calculated. I know how to use it though. So here's how you use it. In this daily chart of the 30-year, if you're long here, you're going to stay long, 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 long until that light blue dot turns to a purple dot, and then you're going to sell. Now, how it's designed to be used is you're going to be long here, and then you're going to sell. You're going to sell, and then you're going to short, and then you're going to short, then you're going to go cover and then go long, then long, 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 sell, and then short, 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 cover and go long, long. So does everybody understand it? I don't use it that way. What I do is I use it as a potential topping indicator. So let's say that Apple's screaming higher here, and I go, Apple's getting a little high up here. As soon as I see this sell dot, and then if I see that the bears are in control, okay, I know it's probably going to retrace some for me. Same thing in crude oil. If I see a sell dot on crude oil, it's probably going to sell off a little bit for me. If I see a buy dot, and it's probably going to bounce, but it really has to, I have to, number one, see if it's trending first. And then if it's trending, and then I see who's in control. If it's trending, number one, yes or no, who's in control, bulls or bears? And then where is the support and resistance in real time? So then what I do is I just add clouds, which makes it a little bit more confusing, but not too bad. It helps me avoid the chop. It lets me pull it all together. Let me show you what I mean. What I'll do is I'll go to live charts. I think it's time for live charts. So trust but verify, show live charts, pull it all together. All right, so let me do that. I am going to go to live charts. All right, so I'm going to go power shift. All right, so let me show you what it did back in the COVIDs. The vid. Can we all just call it the vid? I like the name better than COVID. All right, back in the vid, back in the day in the vid, I want to walk you through the signals that this creature gave us so you can see exactly how this worked. So you can see if you think it's worth your while or not. Okay. All right. Number one, we're going to use this right here. Is it trending? Yes or no? Down here. We're going to go through a framework of checklists. Is the yellow above the white? Yes or no? Down here, right where I'm pointing, down here. Yes. Who's in control? Bulls or bears? Bears. Okay. What do you notice right here? Sell dot, right? Sell. Cover. Okay. Now let's look at the first cover dot that we have, which is right there. Who's in control? Bulls or bears? If I zoom in right there, the bears are still in control. Okay. And then you had bear, bull, bull, bear, bull, bear, 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 bear. So the second signal here, then you have bullish control and trending after 4 or 5 dots. Does that make sense? So you could have covered down here, which is not a bad idea, but you wouldn't go long until right here. Does that make sense to everybody? And then look at all the opportunities that you had to buy these pullbacks. Okay. So now we're going to talk about where we are right now. So in the Dow index, where are we right now? Are we trending? Yes or no? Yes. Who has control of this thing for 1, 2, 3, 4, the past 4 days? Who's had control of that creature? Bears. And then what do you have on the second day? You have a sell dot. Okay. Now, nothing goes straight up and straight down. You're always going to have these little gyrations. It's going to do this little, see how this thing is going like this right here? Down, up, and then back over. That's probably what this is going to do. So that's the Dow. Let's talk about let's just see what else. Let's take a look at the ES. Okay. None of this is canned. This is all just real live data that we're just pulling up. Okay. I'm going to show you the signal. You get a horizontal line. There's your sell dot, trending, bearish control. Make sense? All right, let's do Nasdaq. Nasdaq, you got a says it's trending. Now, one thing I would do, you got bearish control and trending, but that sell dot right there is about to switch over. So the Nasdaq is stronger than the S&P and the Dow. So I wouldn't short the Nasdaq just yet. You're still just a little bit early. Okay. But what do you reckon I told our members to do at RTY about 5 days ago on the Russell? Anybody want to take a guess? Watch this. Trending, sell dot, bearish control. Pretty simple, right? Let's take crude oil. Crude oil, look at there. Trending, bearish control, boom, sell dot the next day. Now what I'm going to do here is I'm going to really quickly, because I don't have anything set up here. What I want you to do is you just list me a bunch of symbols. They do have to be cap lock so I can read them. I'm just going to randomly grab some, okay? So you guys give me some symbols and I'll look at them. I don't care what the markets are, just sell them at me. PLTR. I'm a long-term holder of this one. This is a bullish control, and it's a little conflicty because you got a sell dot there, but I'm a long-term holder of that one, so it's a little bit different. mRNA. Moderna is trending. The bears just showed up yesterday, so it might sell off a little bit. NVIDIA, NVDA. NVIDIA is trending, bullish control, and a buy dot. It's going to go higher. GM is trending, bearish control. There's the last signal. And it's been dropping ever since, right? What else we got here? MA is trending, and it's also bearish control, right? Trending, bearish control. See how easy that is? Ford is trending. I'm just going to the last signal that I can show you. Trending, sell control for the past 4 days. Now, obviously, it was a sell back in here too. I'm just taking the most recent one to show you guys. Okay. At BTC. Okay. Little Bitcoin. Bitcoin has been along since 40,000 and continues to go higher. You got a little bit of sell dot, but then it whipped right back into a buy dot. Cryptos are a little whippy, so just be careful with cryptos. ETH, which I am a holder of. Oh, at ETH. ETH has been a trending bullish control, and you had 3 sell dots, so you could roll out of that and wait for the next re-entry if you wanted to. Tesla, TSLA. Tesla right now is a trending bearish control, so it's going to go lower. AMZN, okay. Amazon, all right. I'm a long-term holder of Amazon, but right back here, that was a sell signal, and then you got another sell signal right here. Okay, so sell signal there and then here. And it's working like gangbusters, right? TLT is bullish. It's trending. It's bullish. Probably goes higher to like 155. CSCO, Costco, is trending. The bears are the bulls are in control, and you got 2 buy dots. Cisco's probably going higher. Can you use this on Forex? Yeah, you can use it on Forex. It's working on pretty much anything. Yep. Makes sense, everybody? Now, I know I can't get to everybody's stock symbol because I got to go back into the PowerPoint. But what I'm going to do at the end of the PowerPoint, I will go through more symbols for you guys so you can actually see if this will work for you, okay? And I'll try to stay as long as I can because I'm the last speaker, so I'm not going to go over a timeline or anything like that. So let's take a look at the rest of the PowerPoint. Okay. Do you see how this is a powerful way to position yourself for the next big new moves, regardless of when they roll over? This is a great way to time it, in my opinion. Now, it's clearly us versus them. It's always us versus them because Wall Street is not our friend. They design their pockets. They design their products to pick our pockets to separate us from our hard-earned money. That's how they do it, right? That's just the reality of the situation. This is no time to go it alone. You know that Wall Street will do just about anything and say anything to make you forget about the risk that you are exposed to in today's overinflated stock market. They want to keep you fully invested and buying even more stocks and more shares and more funds right up to the very last point before the next big decline. I want you to disappoint them. I want you to preserve your wealth. I want you to keep it growing safely by fully understanding the risks as well as the rewards that the market has right now. More than that, I want you to use these principles and these tactics to double your money and then double it again as the stock prices get hammered into the ground. When they get hammered and then you start seeing the reversals to the high side, when they start bottoming, then you can pick up some discounts, okay? That'll be your single dip. Or if you want to also short those things, that'll be your double dip. And then if you want to get along at the bottom and ride the wave higher over the next 10 years, that'll be your triple dip. The mother of all bubbles mentoring program. It is Module 1, how to use the power shift for swing trades and day trades. Module 2, how to trade trends and trend reversals. Module 3, how to use the Parabolic Sar for swing and day trades. I'm going to teach you how to hedge. A lot of retail traders don't understand how to properly hedge. I'll teach you how to do that. And then ongoing mentoring. Here's what's in each module. Best ways to use the power shift indicator so that you can avoid the chop. You always know who's in control of the markets, and so you can stay on the right side of either the bulls or the bears, depending on which way you're going with, right? This is both for swing trades and day trades. One is for building wealth. One is for cash flow. Module 2, how to trade trends and trend reversals. If you get this, everything's going to be a lot easier and simpler to deal with so that you can go with the markets and not against it. Simpler and easier way to trade, in my opinion, so you do not have to think so much. Module 3, how to use the Parabolic Sar for both swing and day trades. How to find the best stop for you to use. My stop may be too large for you. Your stop may be too tight for me. It just all depends because everybody's got a little bit different risk profile. This is the best tool, in my opinion, to keep you from being a serial killer of profits, jumping out of stuff too early or holding stuff too long. So that you don't have to worry or guess about what your stop loss should be ever again. It'll help you. There's a little module that we go through, a little exercise so that you can pick your perfect time frame or tick frame for your personal trading account. So you'll never be confused on what stop should I use here. Module 4, how to hedge. I'm going to show you how to hedge trades so you can stay in them longer, and that will potentially increase your profits. Dirty little secret that can potentially make you a lot more money. If you think it's going to go lower, you can buy the dips, and you can also hedge by being short an ETF or a future, or you could sell. You can do an option strategy to bet on the downside too, right? Module 5, ongoing mentoring. Once a week for the next 4 weeks, we will meet and go over the markets live. So that you can find the turning points in the markets. Now, I made this up on the fly last week, and I was like, and you guys can also ask live Q&A sessions there and bring a list of your stocks. And I was like, I got to thinking, I was like, what if I don't get this thing right in the next 4 weeks, which is entirely possible. Like sometimes I'm just not that good. And I was like, what if I throw in one meeting a month after our 4-week meetings for the next 6 months? So it'll be 4 meetings, 1 a week for the next 4 weeks. And then after the end of that, then I was going to tack on 6 months, one meeting a month for the next 6 months, because I'm pretty sure that the market's going to go roll over in the next 6 months. All right. But I don't know if it's going to be in the next 2 days or the next 2 weeks. So I threw that in there too. So I do reserve the right, because my partners are currently trying to talk me into raising the price of this program, because on the fly, I just threw in those extra 6-month meetings, 1 a month for the next 6 months. So a heads up, I do reserve the right to change the price in the future. All right. So the indicator, you'll be able to identify trend versus chop. It currently works on Wealth Charts, Ameritrade, Thinkorswim, TradeStation, NinjaTrader, eSignal, a bunch of different platforms. But if you have a decent platform, I can show you how to modify one free indicator that'll be 98% as close as my power shift indicator. Because all I did is I took a really complicated indicator that's just a pain in the ass to use, and I made it simpler and easier to use, throwed a new name on it, and used it in conjunction with those other two, okay? But you'll use, so if you've got a platform that's closed that I can't develop for, like Charles Schwab or Interactive Brokers or Tastyworks, I can show you, yes, it'll work on TC2000, as long as it's got this one free indicator that we can modify to make it look useful, because the default way will make you go blind because it's so hard to use. We also have a multi-chart platform license so that you can use it on more than one chart or package at the same time. So if you have like 3 different vendors, no problem, we'll support it on up to 3. And then also if you have more than 2 PCs, we'll support it on up to 3 PCs. Okay, so it'll work on multiple vendors and multiple PCs. We have a free installation and tech support. You do have to schedule it though. You can't just call up and say, hey, fix my stuff. You have to say, hey, I would like you to fix my stuff. They're like, all right, let's let you and I work out a date and time that works good for both of us, and then they'll install it on your machine for you. Who's this not for? If you suffer from, if you're a holy grail seeker and you suffer from hopium, or you suffer from guru-itis, which just means you got $1,000 in your account and you think by buying this class you're going to make $4 billion. Well, that's a little bit much. $1 million by the end of October. That's an unrealistic expectation of both your skill, my skill, and the market's volatility. That's not going to happen. Okay, I'm not saying it's not possible. It's highly unlikely that that'll happen. This is not a business opportunity. This is real trading. I'm going to help you time the market. You still have to place trades. All right. If you can't make a decision, I'm not your guy. If you like to make things more complicated for no good reason at all, once again, I'm not your guy. I'm an acquired taste. All right. Who is this for? If you're serious about making real money in the markets, if you're looking for a proven system, if you can follow a simple set of rules and checklists for your stuff, and if you understand that your success is actually tied to you actually taking an action, then you're probably a consenting adult and you understand the risk that you're taking in any of these market situations, right? All right. So there are 3 types of people in the world. There are those that make things happen. Hopefully you're that crew. There are those that watch things happen. And then there are people that stand around and ask, oh shit, what just happened? Please don't be the 3rd group. Please don't be that group. Which one are you? Hopefully you're in group 1 or 2. All right. And you're paying attention to the details. So you're going to want to go to hubertcenters.com/power. The power shift retails for $497. I do reserve the right to double the price in the future because both of my partners are trying to get me to increase the price because I'm giving 6 months away instead of just 4 weeks. You get a trends and trend reversal module. Best way to use the Parabolic SAR. 4 live analysis sessions, 1 a week for the next 4 weeks. And this is why I say that, because this is not included. I'm also going to do 6 months, 1 a month for the next 6 months after your 4 weeks are over. Okay. And that would add up to the total here that I don't have in here. That's why I say I reserve the right. That is a total value of $988. You can pick it up today for a discount of $497. The deadline is for the first 18 people on this webinar. You can also call area code 859-963-3445. Now, when you go to the shopping cart, here's what's going to happen, okay? You're going to fill it out, first name, last name, email, phone number, shipping address, valid credit card information, and then just submit. Oh, look here, Dean F. just placed the order. Dean, thank you, brother. And then you could submit your order right there via credit card. If you want to finance your order through PayPal, if you apply for their credit card, I think they'll finance it for, it's either 30, 60, or 90 days. It's like $20 a month until it's paid off, something like that. You just got to apply for the credit card is how it works, okay? So if you want to finance it through PayPal, hey, Catherine C. from Pantango, Texas, thank you for your order. I appreciate it. All right, so that's how it works, okay? Now I'm gonna log in while you guys are sitting there placing your orders. I'm gonna log in right now, and I'm specifically gonna be talking to the people that are taking me up on this special offer. I'm gonna log in and show you what the member area looks like. If I can learn how to talk this morning, it would be great. And I'm gonna show you exactly what you get with this, okay? So I'm logging in to the website. I'm gonna show you exactly what the modules are, how long they are. Yeah, it works on Ninja 8. You're fine on Ninja 8. No problem there. So let me go right here. Come on, baby. All right. So this is what it looks like. Okay. You're going to go to, this is my account, and then I would go to Power Play Workshop. Okay. So then once you log into the Power Play Workshop, this is how it works. Group coaching live, more coming soon. So I just did one last week. Don't worry. You guys will still have your 4 group coaching recordings. And then here's the workshop. So you got 3 different videos. The first video is exactly 103 minutes long. The second part of the video of all these modules is exactly 108 minutes long. And then the third part is, let me see here, 38 minutes long. So those are the 3 on-demand videos that you're going to watch in order to learn the structure of how this works and how to do it, okay? That is how it's going to work. There's your link. HubertCenters.com/power, or you can call 859-963-3445. And then once you do it, what you're going to do is come over here to the group coaching call. I just got to pick one for next week. I was headed to Alabama, but then we think Jeanette got COVID, and then the Delta variant's been kicking everybody's butt. So I'll be doing one live session next week. One live session, okay, next week for our scans to see where we are. Is the market rolling over? And what are we going to either sell, or what are we going to short, or what are we going to buy when it sells off really good? So when I talk about that stuff, I'm going to do live charts here in just a second too. Just give me a second. So everything's recorded. If you can't make any of the workshops, don't worry about it. They're all recorded. Here's the link to all your indicators, the bonuses, the extras, because I like bonusing people extra stuff, and I always over deliver. So that's what you get. I am going to put this back in front of you, and I'm going to shrink this down. Give me just a second here. Let me get all the ink off of here. I'm going to answer all of the purchasing questions. Links to sign up. Oh, let me give you the link to sign up. I'm sorry. I'm doing a terrible job of making this offer here. My bad. Let me grab you the link, put it in the chat box. There it is for you. I'm going to send it to all of you right here. There's the link. There you go. All right. Can you use the indicator on Forex? Yes. Nice. Thanks, Hubert. How have you been? Been good, Rob. How are you, brother? How do you tweak the ADX to show whether the bears or bulls are in control? It's not the ADX, Tom. It's a different indicator. The ADX is just one component of it. Do the indicators work on intraday tick charts? Yes. Just be careful, Thomas, on intraday tick charts. Don't go too low. The lower your signal to noise ratio, or the higher the lower the time frame, the higher the signal to noise ratio. So that goes for any indicator, okay? Does this work on TC 2000? Yeah, because it's all of the indicators that are included, but one is a little bit proprietary, right? Because I just tweaked a free indicator and made it way more useful. All right. Can I get the recording of this webinar, Hubert? I missed the first part. Carrie, I couldn't tell you. Is it available on NinjaTrader 8? Yes. Can you put the link in here? Sorry, I just did that. What days do you do the live sessions? Usually they're either Wednesday or Thursday evening, because we're going to be doing swing trades, not real aggressive day trades for this stuff. It's swing trades that we're going to be doing for this thing. It'll be we'll be doing indexes, ETFs, and stocks. And then if you whatever option strategy you want to sell to the downside, you can. Does this work in interactive brokers and Canadian Quest trade platforms? I would say interactive brokers, yes. Lukeman, I don't know about Canadian Quest trade platforms. I just don't know that much about it, brother. So I don't want to lie to you. Where is the link? The link is in the chat box. Let me hit the link to you one more time. Sorry, guys. I did a piss poor job of giving you the link. That is all my fault. My bad. Let me hit you with it one more time here. Dink, dink. How do you scan for stocks with these indicators? I do it manually, is what I do. I do it manually. Do you have a scanner for this indicator? There's no scanner for this indicator. I manually scan all the markets in real time with it. I go through all of the futures and then all the stocks. And then I asked the people that took it last week if they wanted me to build them a portfolio, and they said yes. So on this next live one, I'll have a portfolio build out for them. And then they also I asked them if they wanted me to send them alerts via Telegram. I was like, hey, would you guys be okay if I send alerts too? And they're like, oh, we'd love it. So those are two unadvertised bonuses that I don't talk about here, because I like to surprise you with them and go, hey, not only am I going to show you how to time it, I'm going to show you the trades that I'm thinking about making myself too. And I'll do a portfolio tracker. We'll just use like Google Docs or something like that, and I'll show you exactly what I'm doing in my accounts. And then also I will alert you via Telegram. Okay, so which is just a little message app where I can talk into it and go, hey guys, I'm shorting diamonds right here, and here's my stop, and my target is this. All right, so I'll do that. What is the lowest time frame you'd recommend? I mean, if you're going to swing trade, I would say an hourly chart. If you're going to day trade, a 10-minute, or I use a daily, an hourly, and a 10-minute. Let me go over this real quick. What about wealth charts? Does the scanner there work with the indicator? So you still can't scan with wealth charts, Carrie, because it's not a scanner, but they do have the indicator built into wealth charts, correct? Let me walk back over here and show you what's probably going to happen, guys. Here's what I think is going to happen. I'm gonna shrink down my trade station and make sure I got the link up here. Can everybody still see the link? I just got to do this the right way so I can do two things at once. Everybody still see the link? Hubert Centers Power. Okay, there we go. That's for power shift. So let's just say the Dow index. Let's say at YM. Okay. So what we're going to do is we're going to take let's go from COVID. All right. I'm going to change this to a weekly chart. All right. Actually, I've got this in a slightly different format, and I've already got this broken down for you. So let me do this real quick, and I'll show you on a clean chart. Oh, this is going to be perfect. You guys are going to love this stuff. All right. So I'm going to show you what I would do if I was going to do it on the YM. So on the YM, if I look at this, and this is a weekly chart, you see how I've got a fib retracement here of 13 and then 30? That's where we're headed, in my opinion. From the dead low of COVID to the dead high of where we're at right now, if we pull back 13%, the Dow's going to be 33,192. The Nasdaq, or if it goes to a 30% retracement, that's 30,126. I don't know about you, but that's going to be a fun ride, right? And you'll be like, but man, I don't trade Dow futures. What else can I do? Don't worry. I'll show you how to do this. DIA. Just do the diamonds. Just short the ETF on the diamonds. The diamonds are going to go to 333 or 303, right? Same thing. We can do the same exact thing in the S&P 500. S&P 500, it's probably going to go to 4164 and 3766. The devil's in the details. You just got to know how to do this timing thing right. It's all you got to know how to do, right? So if you don't know how to do the S&P, you can do SPY, right? That's an ETF you all have access to. So they're going to go to 417 to 378. So what we're doing is we're using the statistics of all these little drawdowns to our advantage, and we know, hey, it's probably going here. It's probably going here. Now let me show you why I say that. Remember when I told our members 4 or 5 days ago, I said, hey, sell this sucker. Look here, it's already at 13%. The next place it's going to go is 30%. The Russell's just the weakest one right now. What do you think is going to happen when they all jump on the bandwagon? Or God forbid, what if Delta starts getting worse across the United States, which it is? Or what if the Fed decides, hey, heads up, we're wrong on this stuff. We're going to have to raise interest rates, and we're going to have to do it quicker and faster than we thought. Or some of them just switch and said, hey, We thought we were going to stop buying bonds. We might have to buy more bonds if this Delta thing kicks us in the teeth. So we have got almost the perfect scenario for a perfect storm for a nice little sell-off. Now, I cannot predict the future, neither can you, neither can anybody else in the world. I'm pretty sure that we're going to sell off soon. I don't know if it's going to be in the next 2 weeks, the next 2 months, or the next 6 months. But regardless, you'll be covered because you're going to have access to me for the next 4 weeks, one a week for the next 4 weeks to scan the markets, and we'll time this sucker together. I'll show you the good, the bad, and the ugly. If we make money, you'll see it. If I'm losing money, you'll see that. All right? So, and then also you'll have access to me once a month for the next 6 months over that. So we're always just talking about, all right, what are we doing? What are we doing? Oh, it's getting weaker. We should be selling it. Okay, now it's starting to slow down. Now we're starting to bounce. Now we should be long. Hubert, I just bought Ford. Followed you for a while. I'm finally, brother. Will I get a link sent to an account via email? I got a receipt. Yeah, you will, Todd. You sure will. Yep. And if you don't get it, Todd, all you got to do is this right here, brother. It's super simple. Thank you for your purchase. I appreciate it. You can just email us support@hubertcenters.com. If for whatever reason, if you order and you don't get a confirmation, which you should, it just takes a little while. You can also call the office. Now, nobody in the tech support is there today, but they'll be there Monday. Okay. Will these indicators be available on TradingView? John, they're already pretty much available on TradingView. I can the Parabolic SAR and the ADX are available, and then I've got a video shot that when you ask for it from support, if once they confirm that you're a buyer and you've invested in this course, they'll say, hey, here's a video of how to modify a free indicator to make it look like 98% accurate to what the power shift is on the one that I built in TradeStation. Because all I'm doing is I'm taking a free indicator that is a massive pain in the ass to use and make it actually easy to use. All right. Thanks. Looking forward to riding the bubble together. Thank you, Todd. I appreciate it. So once again, you go to hubertcenters.com/power, area code 859-963-3445. And then you're just going to go right over here. You're going to place your order. If you want to finance your order through PayPal, you can. It is possible. Or if you just want to do a credit card. Oh, is this a one-time fee? Somebody asked. It's a one-time fee of $497. This is not a subscription. This is a one-time fee of $497. Okay, it is not a subscription. And then just make sure you click oh, look there, Michael M from Ocala, Florida. Thank you, brother. I appreciate it. If you want to finance your order, you can click right here through PayPal, apply for their credit card, and they'll finance your order. Here's Anthony A from California. Thank you. Is the cloud important too? The cloud is important. I just left it out of this presentation because I just didn't want to confuse people. The cloud's just a little bit more messier. So you can see there's the power shift. This is what the power shift looks like with the cloud and the other two on top of it. It's just a little bit more messier. So for this presentation, I just keep it off just to make sure nobody's confused. Yeah, but we do incorporate it for sure. Does this combination work well intraday? Some of the cryptos say 2 minute, 3 minutes. Yep, I be careful on a 2 minute. I would say the 3 would be better, and the 15, yes. Now, what I'm going to do is I'm just going to do charts for a little bit. Okay, I'm only going to do it for the next 5 or 10 minutes. Here are the rules. If you break the rules, I'm just going to ignore you. It just means you don't pay attention to detail. All right, 1 per line per person has to be cap locked so I can read it. All right, and I'm going to let you see whether you think this thing works or not in real time. I do not care what the symbols are. I just don't care. I'm just trying to be as transparent as I can with you. It's either going to work or not for you. That's the reality of the situation, right? All right, here we go. PG. All right, let me get my little writing instrument out of the way, and I'll try to do as many of these creatures as I can. All right, there's what PG looks like. It is trending bullish control. Looks good to the high side. SOFI. SOFI is trending bearish control, probably going to drop to $10. X is trending. All right, so here's a mixed one, right? So this is important. All right, so you got trending bullish control, but you got 2 sell dots here. What do you do with that? You let it pull back, and then you wait for your buy dots to buy on the rotation from high to low. That's how you do that thing. Okay, X, that's good. DDOG, trending bullish control. It's rotating. It's going to pull back and then rotate back up. TLT, trending bullish control. Next target 115. HWM, non-trending bullish control and sell dots. I would just leave that one alone. BITQ is trending bullish control, but you got sell dots. Wait for the buy dots again. Okay, Micron Technologies, trending bearish control. Next target would be like $55 to $60. SWBI. Let me go. Make sure I can look at something quick. This is trending bearish control. Next target 20. NVDA is trending bullish control buy dots. Next target 240. AAPL, Apple is trending bearish control. Might go down to 140. Apple's just a little bit sideways here. I wouldn't do anything until it broke out of that little sideways. Can you please put it in on BTC USD? How about I just go at BTC, which is the future? It's the same thing. There you go. It is bullish control, trending, going higher. It'll probably go to around, on the future side, probably 56. Okay. WTER is trending bearish control. Next target, $140. Be careful. Penny stocks. D. Trending bearish control. You can barely see it. I'm going to show you why I say it's a bearish control. You see how, let me show you why. See how the red are on top of that thing? So it's a little subtle nuance you just got to be aware of. All right, because that one's just a little tricky, little trickster. All right. Let me see here. ROKU, trending bearish control. Next target 276. EXPE, trending bearish control, going lower, target 120. At ETH is trending bullish control, probably gonna go higher, folks. Now it's gonna rotate. Now, so there's what you have. Amazon, AMZN, Amazon, trending bearish control. Next target 3,000 even. You guys see how simple and easy this is to use? Pretty simple, right? Pretty simple. And look, there's no smoke and mirrors. This is all just, you guys are just throwing them at me, and I'm hitting them as hard as I possibly can. HD is trending bullish control. I would wait for the dots to flip back underneath it before I would get long. How do you determine the next target? I'm doing a risk reward ratio, Lukeman, in my head. I'm figuring out how much I would risk and multiplying that 3 to 5 times is what I'm doing. That's the only way I can do it and answer these so quick. DOGE. I don't have, so I can't do that one through this one because this Doge is not on TradeStation. Do you trade YM intraday on small time frames? Yes, I use a 2-minute chart. At RTY, this is a short, bearish. It's trending. Yes. Who's controlling it? Bears. Sell dots. The Russell, the next place the Russell will go, in my opinion, will be here. 1,938. 1,938. I get the trending and bearish bull, but how do you decide the amount? What do you mean the amount, Lori? Are you eyeballing risk to reward ratio? Yes. Yes, I am, Lori. Exactly. Yep. In order to get through as many symbols I got to do on these webinars, I just eyeball the stops and the targets. Are you using clouds with this? I am. I'm just not doing it in this PowerPoint because in this presentation because it'll confuse more people. I do it in the live class, so I do incorporate the cloud in all of my analysis. Yes. URI. All right, Jared is telling me there's only a few left, guys. So hubertcenters.com/power. This is what the shopping cart looks like when you go place your order. I mean, you guys know how to buy stuff, right? I mean, we're Americans. We love buying stuff. What am I talking about? Ian W. from Queensland. Thank you. I appreciate it. And then once again, I already showed you what the members area looks like. Will this work on cryptos? Yes. Yes. I'm gonna give you guys one freebie, okay? I've already given you some really cool information. I'm gonna tell you 5 cryptos that I think you should own. I'm gonna tell you 5 cryptos that I think most people should own. There's no guarantee, okay? Will you accept crypto on payment? Hell yeah, Robert, I will. I don't know how to. We don't normally do it, but I would. Here's two that I'm in that have been working out really nice for me. Okay, so I'll show you these. So this is Coinbase. So here's one I like a lot, ADA. Now, full disclosure, I'm going to show you I'm already in this creature let me show you this right here. I've got fills on this crypto at 106, 127, 113, 120, 104, 145, 110, 118, 45, and 150. I'm up a little over $10,000 on this trade. Okay. And then I'll also show you really quickly on ETH. On my ETH, now I got a few ETH, but on my ETH here, let me show you on the ETHage. On ETH, I've got 41 of them currently, and I'm up $136,000 on that one. Here are some cryptos I think you should look at. Okay, I'm just going to type these in the chat box. Bitcoin, if you can afford it, but Bitcoin's going to be harder to double. Okay, I'm going to put that in the chat box. ETH, I like that one. Obviously, I own some of it. ADA, I like that one. DOT, Polkadot, DOT, and then also there's three. Okay, you guys want a couple more? Heads up, when you're doing cryptos, you guys do understand it's risky as all get out, right? Like, there's no such thing as zero risk in a market. There's like 1 to 10, 10 being the most risk you can possibly take. I'm not a huge fan of Ripple. I've got some at Robert, but I'm not a huge fan of it. I just don't like the lawsuit the SEC's got them tied up in right now. Cryptos on the risk scale is like a 42. Okay, so it's super risky. I'm going to list you off some other cryptos that I like that may help you. ETH, Bitcoin, ADA, DOT, Theta, SOL, and Dash. Those are the ones that I like. That'll help you out. You can buy most of those on Coinbase. All right. Can you show some examples in your course? What do you mean examples? Define that for me. Life is risky, right? Yeah, Theta. Yeah. Can I show some live trading? Well, John, they'll all be swing trades, brother. So they're not going to be day trades. They'll be swing trades. Yep. Say the last ticker. Okay. ETH, ETH, Bitcoin, ADA, DOT, Theta, SOL, and Dash. Look at Amazon app. You got to play by the rules. One per line, brother. AMZN. There's Amazon right there. Theta, yes, Theta. What time do you focus on spot cryptos? I don't day trade them. I swing trade them and hold them for a little bit, John. Yep. The cryptos are so sketchy that you just got to be paying attention. Like, I look at them 4 times a day: breakfast, lunch, and dinner, and before I go to bed. Like, when I wake up, breakfast, lunch, and dinner, and before I go to bed. And the weird thing about cryptos, like, they do have to have use cases, but some of the stuff that don't even have use cases will go like crazy. Here's how I look at cryptos: really good returns, but super, super risky, and nice way to make some returns. You just gotta know what the heck you're doing. When you invest 10,000, you should be able to burn that $10,000 and never see it again, or that 1,000 that you put in here. Can you buy options on cryptos? God, that sounds like a nightmare. That sounds like making it even more risky. For how long will we get the trade alerts? Well, I would say for at least 6 months, right? Yeah, because the course, it's a one-time course, once a week for the next 4 weeks, and then once a week for the next 6 months. And then I'll just alert you guys to what's going on. Do you think cryptos will follow the crash in the stocks? I think some of them will get hurt. Yes. I think other of them will do fine. Like, you would think that gold would be going up right now, but it's not. It's kind of like we've got a societal shift from gold into cryptos. If you talk to somebody that's 30 to 40 years young, right, and younger, if you talk to 30 years and younger, they don't even know what gold is. It's all cryptos. Do you use stops on cryptos? Yes, I do. Square, SQ. There you go. All right, guys. All of the power play workshops have been purchased. I appreciate y'all. Number one, I appreciate you guys watching the videos. I also want to thank you guys for showing up and registering for webinars. I know me and Jeanette and Scott appreciate it. Alan sneaking in there right at the last minute. Sneaky little booger, you, Alan. And I also appreciate you guys attending webinars and making purchases and investing in yourself. I can't even pronounce that name there. Elazer, Elazer. Let's go with that. All right. Good luck. Hope it helps. I will see you on the next one.